Before we begin, usual risk disclaimer. This is just for education purposes only. No financial advice. We're going to be talking about projections. I've been asked these questions a million times in the Discord, and I kind of kept it aside for a while, but I see a few of you in here that I've talked about this with, and I just wanted to share with everyone as well. We're just kind of gonna go through this. I made a little bit of a presentation for you guys just to keep it consistent, but we're gonna basically talk about specifically ICT's price action model 6 in parts, some jade that was in there. We're gonna understand what an implied MMXM dealing range is, and then we're gonna talk about the 233, the signature of it, and why sometimes I measure the right side of the curve, because I know a lot of people ask me that question often. So without further ado, let's begin. ICT has copious amounts of content on YouTube. All the credit to the stuff goes to him. I've spent countless hours, days, weeks, months, and years looking at this content, and without a shadow of a doubt, price action model 6, aka market maker models, is one of his concepts that I like the most and that I identify with the most. But specifically today, I want to talk about one video, which is the amplified lesson that comes with price action model 6. And specifically in this video, there's, I would say, not even a minute long of ICT talking about a specific concept where I kind of got the light bulb moment for the projections. So let's get there. I'm sure most of you are familiar with the idea of the Jade Master, which ICT talks about, but it's basically to say that in the videos, there are small gems that are buried into the teachings that actually mean a lot more perhaps than the majority of the rest of the video. In this case specifically, this is the timestamp. You can go look for it yourself afterwards. But the idea is to basically look at an implied dealing range. So as ICT says here, whatever price would be, aka wherever we are in price, we're looking for an initial buying opportunity, talking about a market maker buy model, that is between 20 and 30% of the anticipated range. He says we don't need to be right down here, which means that the SMR, aka we don't need to just be entering on the SMR, we just know that the first buying opportunity will be between 20 and 30% of that anticipated dealing range, right? So if we kind of look at it like this, knowing a market maker buy model, we know that the anticipated range will be the original consolidation, right? Does that make sense to everyone so far? Give me a 1 if it makes sense. Good, good, good. Give me a 2 if it doesn't. And then there's one little other piece of information that he drops in there, which is he's saying 20 to 30% because they may be a little bit higher than we anticipate. The way that I interpreted this is all interpretation of mine, I'm not saying the ICT said this specifically, is that there is a little bit more of a range that we could anticipate, not just the original consolidation. I've never seen a market maker model that just taps this by a tick and then reverses immediately. They happen, but oftentimes we move a little bit higher, a little bit lower if it was a market maker sell model. So these 2 points of information to me were massive. I've watched this video probably 50 to 100 times, like easily. And this is where to me the most value was. You might ask yourself why. So this is a little bit of an excerpt of the video, and let me just zoom out a little bit so the drawings are not all over the place. And this is kind of what ICT is talking about. Now, this is a market maker sell model, not a market maker buy model, but this is when he's talking about that buying opportunity at 20 to 30% of the range. It's in here. I kind of like highlighted it for you. And this is your 100% of the range, which is buy-side liquidity, accumulation, or offset distribution. Now, the question I have for you is, what do you think is happening in this 20 to 30% that makes it so important?
Please be interactive, everybody. If you're in the chat, we'd like to see multiple people typing. The more interactive that you are, the better that you're going to be able to digest information. Specifically, when we get into very complex points of dissecting each curve, it's really important that everyone's with us. And again, if you're able to participate, you're going to see that you're going to have a better result of digesting the information.
Manipulation, sure. Change to delivery, sure. Consolidation, sure. PD arrays are formed. Here we go. You got it. So that's the answer. We're getting closer. Order pairing, sure. Now, PD array is the right idea. What PD arrays are getting formed down there? That's the second question. Rejection block, yes. OBE rejection block, yes. Order blocks, beautiful. You got it. So it's an old low, which no one said, but that's fine. A rejection block, or bullish order block. So that's how we identified the lower side of this dealing range. Do we have a rejection block? Yes. Do we have an order block? Yes. Beautiful. So we have a candidate. We can say this is a candidate for a turning point, aka a smart money reversal. Second question. Why does ICT say that in this 20 to 30% portion, we're looking for a fair value gap or for sell stops? Let's start from the fair value gap. I'm going to give you the answer to that one because it's pretty straightforward. It's the next PD array in the PD array matrix. So if we have an order block, we have a rejection block, we have an order block, and then we move out with displacement, exactly, we want to see an imbalance in price. So that's why we want to look at that imbalance. If we're going higher, we're looking to rebalance those imbalances before we're moving higher. Right? Now the sell stops is where I want to ask you the question. Because if we're looking at the PD array matrix and we're at fair value gap, why is ICT referencing a low again? Why are we resetting the PD array matrix all of a sudden? And if you guys watch the live streams from Josh, you should know this immediately. What are we looking for there? Why is the sell stop important? Internal low, yes. Offset, yes. I'm looking for a specific answer. You guys are on the right track though.
Again, it's very important that you understand this question because this is
Here you go. Someone has it.
exactly what creates what everybody wants to be able to see.
Fractal. The reason why there's a sell stop is because we're going to be forming a fractal market maker buy model. And as Josh kind of talked about, the strongest part of market maker buy model is when you have two aligned buy side of the curves. What does that mean? It means this. If you have a larger market maker buy model like this, what we know is the strongest, most high conviction price moves are going to happen where inside of this, we have a smaller market maker buy model here, and we're both on the buy sides of the curve. So this sell stop right here is nothing but a fractal smart money reversal of this smaller market maker buy model. Give me a one if that makes sense. Beautiful. Any questions about understanding the implied market maker dealing range? Does this make sense to you guys? If you have any questions, now is the time before I move forward. Okay. All clear? Some people are typing. Less people are typing. All right, let's move forward. Now, the age-old question. Where does the 2 to 3 come from? These zooming things are going to kill me today. Here we go. The biggest challenge for me is finding the proper liquidity sweep. We'll get there. We'll get there very soon. So where does the 2 through 3 come from? Now, there's a little bit of interpretation. And as I said, it's my own interpretation of what ICT said. So take it with a grain of salt. But the hypothesis that we have is that we're smart money traders. We believe in the market maker theory for the market. So if the first opportunity is going to be around 20 to 30% of the dealing range, we should see smart money engage before it or at that 20 to 30%. That is pretty much what we've kind of established thus far, right? What that means is then, in theory, if we identify an offset accumulation or distribution or a clear first stage of accumulation and distribution, we can be confident in defining what the dealing range is. Is this clear? Does that make sense? If we know where smart money is coming, we're looking 20-30% of the range, so we know that the range higher is going to be 20/30% plus all the rest. If they engage there, let's say we're a market maker buy model and they're buying, why would they stop themselves out? So if we see signatures, an order block, a rejection block, if a value gap starts to happen, where we see buying opportunities in a market maker buy model, we expect it, doesn't mean that it will do it, but we expect it not to be invalidated, aka traded below again, right? So where does the 233 come from? This is where it comes from. It's actually like third grade math. All it's saying is that if we're between 20 and 30% of the dealing range, and we have offset accumulation or distribution, or a first stage of accumulation or distribution between 20 and 30%, it means that. If it's exactly 20%, we multiply that range by 5 and we get 100% of the implied dealing range. For everyone that wonders where the -4 standard deviation comes from, this is it. People measure that little area with a 0 and the 1, so it's a 4, not a 5, because we measure it with the negative. So you have 1, 2, 3, 4, 5. This is where it comes from. The 233 is the same thing. If it's 30%, if you multiply it by a whole number, you just get to 90. Since this 10% missing is just this. So 3.33, the 1 changes there, and you got 2.33. It's literally third grade math. Anyone has any doubts about this? Any question, concerns? Very simple. The chat is dead. Give me a sign. Okay, the 233 makes sense now. Because I've been talking for a long time, everyone was like, this is a random number. It's not a random number. It's entirely mechanical. It just comes from this. Right? I thought it was some Masonic meeting. It's literally third grade math. And it's between 2 and 2.5. So like, that also starts to make some gears turn, I'm sure, right? Because if you're expecting for some sort of a retracement between 2 and 2.5, if our dealing range ends at 233, which is between 2 and 2.5, maybe it's just you've reached the end of that dealing range. You've reached a terminus of some sort, right? So that's why sometimes it goes to 2 and 2.5 and then reverses, never goes to 4. It's because technically we already reached that dealing range that was set for the market maker model. Now, how do we draw it? That's the question. So this comes from Josh's streams as well a little bit. So if you watch those, it'll make sense. So here's a question for the people that watch those streams. When you have a smart money reversal, let's just say that this is a smart money reversal. When you have a smart money reversal, what signature do we see before we turn around? Most of the time. What type of liquidity run do we have before we shift the curve? Manipulation, yes. I'm looking for a specific type of liquidity run. There's only 2 of them. It's not buy side. It's kind of a set accumulation distribution, yes, but I'm looking for a specific type of liquidity rate. There's only 2 of them. I don't know what OLR is, in full honesty. It's not time-based. I'm going to give you a hint. Resistance. There you go. HRLR. High resistance, liquidity run. Give some XP to Jesser for that one. That's a little bit harder. So what Josh kind of showed was this, right? Being a high resistance liquidity run. Right? This is the signature that I look for. Because if I know that we're going to have a high resistance liquidity run, what does it mean? The price should struggle to go through because it's protected, air quotes. So if we do rate it and then I see it immediately reverse, it gives me more confidence that I'm witnessing a smart money reversal. Now, there's two different types of high resistance liquidity run, in my opinion, personal opinion. This, to me, is sort of on the opposing side of the curve of this market maker style model, and it's very recent, right? So the amount of stops, aka liquidity, that we're gonna have above here is gonna be limited. It's still important to me as a signature to look at, but it's not as strong as, let's say, a high resistance liquidity run that comes from here. Why? Because throughout all of this price action, people are going short, they're putting their stops above this. So as we struggle to come back up, as we know, high resistance is really choppy price action before we actually rate it. Everyone and their mother is getting short on the retail side, and they're putting their stops above here. So there's a lot more liquidity above this type of high resistance compared to this. Do we agree? Makes sense? Also from a time-based perspective, the more time a high is intact, the more liquidity we'll have. To draw the projection, all I look for is what leg rated the high resistance. So you have a choice immediately between these two. What is the swing low to start of that move? That's how I draw it. I don't care what happens between them. So in this case, we either have this for this high resistance, or we have this for this high resistance. I don't care that here we chopped around, put swing lows. This to me is very important. So I tend to give more importance to this compared to the others. Right? So to understand more of this, again, go back and watch Josh's live streams, because the high resistance liquidity run is an extremely important signature, especially with understanding the PD arrays that sit around it and their role in overall price delivery. Right? Any questions about this? Very simple. Very mechanical. Wicks or bodies for the anchor? Personally, I do wicks, because wicks do the damage. So if I'm looking for a manipulation, which is damage in my eyes, I'm looking for wicks. On either side. Some people use the body on one side. Like, you can do whatever you want. I'm not saying that it's a hard rule. Why anchor the entire leg? Sure. Let me just delete this one so I make it extra clear. We have high resistance up here, which means a higher high that gets formed right there. We come back and we rate it. To me, this is where a bunch of liquidity was sitting and it was somewhat protected. What move rated that liquidity? It started on this swing low and it ended here. So as this happens, this is what I'm doing. New high, I'm doing this. New high, I'm doing this. Make sense? Okay. What leg would you use to determine if the MMXM from the swing low of the whole range is done and will reverse again? Huh?
Well, yeah, that's just it's just kind of asking. I love your, that's funny. No, yeah, but this is, can you just invert your chart?
Oof, I hope it works. Yes, it does.
There it is. It's the same thing.
Yeah.
That's all he wants to be able to do.
Okay. Then I take back my huh. Thank you, Josh. That's literally me right now, but I'm bald, so minus the hair. Does that make sense? Isochroma answered? Yes, no,
It's just the same thing. So it's the same mechanics.
Correct.
That's the biggest thing, right? So
All
you just need to be able to find that high resistance signature. And again, just to touch on what's a little bit you're seeing is the high resistance lows. Again, it's supposed to be difficult to run that liquidity. So when it runs that liquidity, that's when you're going to see the true intention of when they actually produce real imbalances. So then when you have imbalances that occur at or near those high resistance, that really just shows you that actual real, like, elephant stepping in the pool. So it either can happen on the previous side of the curve that you saw earlier, or you see it again happen in the offset distribution or offset accumulation. So just to clear that up.
Absolutely. So this is how we draw it. It's extremely mechanical. Now, as I said, there is that differentiation where you may have another one here. Sometimes you only have one of them. Sometimes this doesn't exist and you only have this, which means you need to be a little bit extra careful. Because if you're only kind of like assessing a whole plan and market maker model and implied dealing range and all this based on this tiny move of time, then you're asking for too much. These to me are the best ones. Now, that being said, if I have both, I guess that's kind of when it gets subjective. I prefer these. Some people just kind of like, I see they just draw this little manipulation leg. To me, manipulation means that it starts here. That's pretty much it. So that's how I've eliminated subjectivity from it personally. However, everyone asks me the question all the time. Why do you measure the right side of the curve? You guys familiar with what I'm talking about here? Give me a 1. Have you ever seen when I draw like on the other side? Yeah? Okay, 1's in the chat. This is what I hear all the time. It's all in hindsight. It's actually extreme mechanical. So, how is it mechanical? Answer this question. 1 or 2. Take a moment. Which one of these two, without any context, is most likely to be an offset distribution when we rate that liquidity marked in red? Just give me a 1 or a 2. I need to see more answers. Otherwise, we have a problem here. All right, looks like Escape is chatting. Correct. Beautiful. So if offset distribution is the one on the left, aka 1, then given that we're looking to say that smart money has engaged within 20 to 30% of the implied dealing range, and that's what we measure with our fib, an offset distribution, it just means that they're selling the buy stops. So this is them stepping into the pool, as Josh just said, elephants stepping into the pool. So I'm going to be measuring this, left side of the curve. On the other hand, over here, this is not offset distribution. We're just chomping around, likely setting an order block. We're topping a rejection block. So really, the first stage of accumulation, in this case, the first stage of distribution, is going to occur somewhere in here. Let me do this. And, oh God, like that. It's going to happen somewhere in here. So I cannot be measuring the left side because this is no distribution, no offset distribution. I have to measure whatever happens on this side. Now, what does ICT tell us all the way back here? Sell stop for value gap. Beautiful. So what am I going to do? Surprise, surprise. On here, I'm going to look for either a SIDB to be tapped into, distribution, or a rate on liquidity. Does that make sense? This will be the first stage of distribution. Give me 1 if it's clear. Very, very simple. Perfect. So what does that mean? That if I'm measuring the right side of the curve and I'm measuring the stage of distribution, I'm going to be measuring it like this. Because the distribution is happening somewhere in here. So the 20 to 30%, the buying opportunity, the selling opportunity in this case happens between 20 and 30% in here. So that's why I measure the right side of the curve in this specific case. The distinction between these two things, to me, the best way to make it as objective as possible is to kind of look at this. I cannot believe I'm talking about this stuff. about this thing specifically. So like whatever you draw your, let's just go from here first. Whatever you draw this, so if you're unsure whether it's offset distribution or not, because you haven't seen it enough in your charts before, and you're just wondering how do I do that, this is a mechanical-ish way to do it. If you're measuring the left side of the curve, and you see a candle body, let me do it properly, trading above this, then likely you're not going to have an offset distribution. This is like 75%-ish of the range between that leg that we just measured. If you see closes, bodies, this is where I look at bodies because bodies tell the story. AKA, if we're not just tapping into a rejection block quickly before moving away from a price point of view, if I see closes above 75% of this little leg, then I'm starting to think that this is not really offset distribution, and I should be paying attention at that rate or fair value gap idea that we just talked about. So this is number one in terms of price. In terms of time, which is, I assume, why most of you kind of like settled on this for the offset distribution, is all this chopping around. So it's time. If we're just chomping, then likely wasn't an offset. So keep that in mind too. We may just like tap into a high resistance liquidity, do some stuff like this, come back to it later as well. Like to me, this is also not offset anymore because we're kind of going back. At that point, I don't even care about bodies closing through here because we're just coming back. If smart money got short, why are we coming back? All right. So if you have any questions now about any of this, I can answer them, and then we can look at some charts. You can just throw me takers later, whatever asset you want me to look at. We can look at specific examples. I don't want to cherry pick because this happens every day, so I don't need to. But if you have any questions about any of these things that we just talked about, I hope I made it extremely clear. So no questions means I did a good job. But if you have any questions about any of this, just let me know. And I'm happy to answer them right now. We'll get to charts in a second, AJS. Usually it is.
Please be interactive, everyone. I know that there's several people typing, but also really appreciate everyone being here. Again, if you have any questions, please, drop them in the chat. The recording will be posted on YouTube after it's processed, and we appreciate your patience in getting that on there. So
absolutely. Can we use the OT indicator for that? You could, but you'd have to basically like adjust the manual anchor every time to the left swing type thing. Like to me, like after you do this for like a few days, you just immediately see it without really needing automation for it. That's why I've never really automated this. I just can see it immediately. Same reason why I don't really need to make a fair value gap script. I'm just gonna make a new layout. Volume indicator, get out of here. ICT, there we go. All right. Do you suggest your tools for new traders to help see the markets from an ICT perspective? Some of them, yes. Some of them are easier than others. Like if I just gave you the fractal consolidations and you don't know what ICT is, you're gonna be lost. Exactly the question I was about to ask. Beautiful, Josh. It just entirely depends on your personality and how you like to trade and what you see in price. There's tools that can help you specifically with the type of personality you have as a trader, as a person as well, and they can help you. But some people really like them and it helps them a lot. Others, not really. So it's very personal. It really depends. I don't use all the tools that I've coded ever. That's not even close. I use maybe like 15% of them just because it fits my personality. I'm sure that like some of the OGs in here, like Dell, Bullish, Flux, Breeze, as well as many others, only use a few tools, not all of them. Perhaps even just one. But if it helps them, it helps them. All right, give me an asset. BTC, gold, 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 gold. Let's start from gold since everyone's saying gold. And okay, we're gonna do gold, Bitcoin, and then NQ. We didn't really talk about time frames. So this is of course fractal, so you can apply it to any time frame. But as a starting point, what I like to do, still from ICT, the 50-minute removes the blur. So I kind of always start, oh God, TradingView, why are you doing this to me? Worst update ever. I always like to start from the 50-minute. Okay? Immediately, as I get here, I see this. We made a high over here. Whoa. We made a high over here. We're making a low over here. So I'm going to be looking at this low first. We can look at the high as well. Now, high resistance, close quarters is here. Do we agree? Ones for yes. Give me a 1. High resistance, rated, sat, rated. This is also, but we didn't even really do anything, so I'm not going to count that. Perfect. Now, is there a high resistance further back in time, aka more important, that we want to look at? Let's just go left a bunch until we hit price. All right. Let me zoom out a bit. There's a high resistance here. There's a high resistance here. And there's a high resistance here. Which one of these did we tag? I'm going to put like some horizontal lines just so we can keep track of them. This is literally what I do every day. All right, looks like we tagged this one. So our original, aka old high resistance liquidity run, go around over here. This candle raids it, so I cannot really count that swing. What is the previous swing high? It's up here. So this is how I'll be drawing it. Right? Does it make sense to everyone? Okay, I see some ones. I love how you just do the ones by knowing it. So this is kind of like what we're expecting out of the gate. We can apply a little bit of the logic that we kind of talked about in, where are we? In here. Does this look like an offset accumulation? We're just chopping around, so not really. Do we respect 75%, even though we've been just trading around here for a million ages? We didn't close below it. We tapped it a few times. It's interesting. But we're still kind of hopping around. So this is a good opportunity for us to measure the right side of the curve instead, because we didn't just see price. Like if price from here just kind of went like this, market maker buy model, easy peasy nice, then I'm still kind of like referencing this left side. Since we are kind of like chopping around, where is the order block? There's a massive series of down close candles. We broke up. We tapped back into probably this as an order block. It's just a little bit confusing. So to me, this is a great opportunity to kind of look at the right side of the curve. Is there a fair value gap or a rate on liquidity? SIBI, rather, right there. The first accumulation, first stage of accumulation happened between this point and this swing high. So instead of measuring that side, we were going to measure this side. Is this low lower? Who knows? I think this is lower. So let me just pop these out so we can see the levels. So without even looking what price did afterwards, let's just do an exercise. Put a line here for the 233 and kind of extend it all the way to the right. Let's just send it into oblivion and then do the same thing for the 4. So now we're kind of been chopping around. At this point over here, we kind of established that we're chopping around and we had to redraw. What happens? Would you look at that? The 233 held. We did have a little bit of a close above. So now we're seeing a bit more of a retracement. We can categorize all of this as a time distortion because we're just chopping around. We hit that. Change in state of delivery, propulsion block, and the entire PD array matrix magically just starts happening. Very shorter block. Propulsion block. Fair value gap. Does that make sense? Let me kind of bring back the PDR matrix so maybe we can look at it a little bit better. Oh, here we go. Whoa, it's locked. All right, so this is what we're looking at. Old high is right there. Rejection block. Did we tap the rejection block? Not really. It's up here. We didn't really get into there. Unfortunate. Josh would have been shorted. Very short the block. Now, age-old question. Is it the series of candles? Is it the last candle? Personally, this is the first one that gets close through and gives us a change in state of delivery. I define it with the propulsion block. So if I see a candle that goes back into that and then we start respecting it, then this is, to me, is the actual order block. A little bit of sauce. If we close below this, and this is your propulsion block, if you guys are familiar, you can see how we invalidate this propulsion block. The 50%, we trade above it. So like, to me, really in this leg, the order block is up here. Propulsion block is not in this list, but I put it in the middle here between the fair value gap and the bearish order block. So we have it right there. This is my favorite PD array of all time. This is what I use because of the 20 to 30% idea. Because we are distributing usually around the propulsion block and we shouldn't see it broken. Then you have fair value gap or liquidity void. Check. Liquidity void all the way over here. Fair value gap right here. Breaker, mitigation block. Breaker is here. Surprise, surprise, we tagged that as well. Right there. I'm not going to leave it on because we have way too many things. Breaker, tagged with the fair value gap. Unicorn peeps, happy. Breakaway gap there, we're just talking about it. So now we're looking at a bearish mitigation block. What are we looking on this side or on this side? We're looking at the mitigation block. So this is kind of like where we stand. Projection on the downside. Where is the high resistance liquidity run? I mean, I don't know if I can count this as a high resistance. That's kind of crazy. But for the sake of it, let's try it. And then on the left side, we don't really have much. So we kind of have to either submit to this idea, which is kind of crazy, or this is where it's good to just change time frames. Like, I want to see what's happening in here. So maybe we go to a 5 minute and just kind of like scale down. Any high resistance here that is a bit clearer? Maybe this. See how we kind of like struggled to go back up? We did some raids of liquidity here, setting up some order pairing. So potentially, this leg raised this high right here. Let me delete some of this stuff so we can keep it clean. Therefore, the last swing low before we made that is here. So I'm going to take this as my projections. Now we check. Was this really an offset distribution? Looking like we're chopping around again, spoiler alert. We can put our little range thing over here. We didn't close back above 75%. And I just want to use this as a good example. Like you can see here, we close below 75. If this candle closed back above, for me, it's enough to say that it was an offset distribution. Even if this candle closed a few ticks higher. This one right here. That being said, we are kind of chopping around. So we're going to look at what is the first stage of distribution instead. First stage of distribution, we see a fair value gap or a rate on liquidity on the 5 minute. There's no swings or fair value gaps here. So we can kind of like start looking to the right. Here we have a fair value gap. I don't really care, we traded through it because we rated liquidity. So it would be like this. Because in this area is where we have experienced a stage of distribution. So now I'm looking at the 233, which happily lines up with liquidity almost. And then the floor. Does that make sense? Clear breakdown? Yes, no? Give me a 1 if it's clear. Beautiful. Now, the way that you interact with these levels, you can never forget about where they come from. Why you choose the body for the first fib? There's no body. This fib, no body either. Oh, I mean, it was this low, actually. Let's see how that changes it. Well, not much of a change. Not body, but the green candle. On the bullish one, this one? Yes. Okay, we were on the 15-minute. We were drawing it from here first because we had this high resistance that we rated. Clear this far, I believe. But since we were chopping around, this made me realize that this wasn't an offset accumulation and that therefore the 20 to 30%, which is this little anchor that we use, must have been on the right side of the curve. I found the fair value gap. And to be able to anchor it to the swings, this is a swing high, this is a swing low, the accumulation occurs between these two swing points. So that's why I use it. So the stage of accumulation happens in this range of price. We talked about the fractal side of the curve, so that's why I look at swings, because it's a range. It's a range within a range, within a range, within a range, and it goes on forever. So that's why I use those two swings. So then it just adjusts to this, and that's how we got the levels. Two, 2, 3, hit it, start moving back down, so on and so forth. Now, how you kind of like map it to get to here is up to your own experience. But the reason why these levers on the chart is not meaningless, it's important still. Now, if this is 20 to 30% of our dealing range, if this is to be our terminus, then here, if this is at that point, that 30%, here you're around 60%. So once you reach this point, what is OTE? 62.8, 70.5. So this is where it either fails or it doesn't. Very important. It's a so-called symmetrical swing. So the reason why we're here kind of stalling, we're either going to see us coming back and then continuing. Based on the PD array matrix, we already used the fair value gap, we already used the breaker. So I'm looking at this order flow. There's a few people in here I talked to this about. I see Cal in here. You probably remember I told you order flow, order flow, order flow, order flow. Why? Because now this is kind of what I'm looking at. I don't want to see like these bodies get broken. Because otherwise I'm invalidating the PD array matrix. We're turning around. This is a bullish order block, propulsion block for value gap, blah, 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 blah. So this is why the 1 is important. People that want to be a little bit more confident, wait for that to be tagged first. Then you're going to be engaging in the second stage of distribution. Right? The 2 is when you're really, 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 really close to your terminus. Why would it fade it? It's either setting up a high resistance liquidity run that it will run later. Maybe it's setting up low resistance liquidity run that it will run later. Most of the time, this gets tagged. And you guys already know that if you were using that 2 and 2.5, you know it's pretty consistent. If this leg fails, I assume the other deviation is still in play. Great question. So let me ask you a question based on the 15-minute, because we're already on the 15-minute. Perfect. Let me just delete all this stuff. So the floor is up here conveniently. This looks like an original consolidation. Does this still look to you like a healthy market maker buy model? As of right now, where price is right now. Yes or no? Few answers in the chat. No. Why? Yes or no is 50-50. You may just be lucky. Then you have to tell me why. No speed, looks heavy. Okay, okay. Something a little bit more saucy? Anyone? Josh could probably write an essay about this chart. Okay. Only one person that says that it's still a market maker buy model. Hint, hint, nudge, nudge. All right. I'm going to tell you what I think. If this order flow gets broken, then I'm not really looking for this to be a market maker buy model anymore. As of right now, this is a very tough, deep retracement, but we're still respecting order flow. Down closed candles that take liquidity are still supporting price. This was the fractal side of the curve, like Adam just said. So we did reach some sort of target from there. Now we're just retracing. Like even this down close candle doesn't take liquidity, but we can see how it was supported by other down close candles. Like this is very important to me right now. This close in 6 minutes, very, very important. We're inside of this dealing range. We got back into the 50%. This is really like a decisional moment. So to answer your question a little bit more straightforwardly, because I kind of like tiptoed around it, it just depends how far back you retrace. In this specific case, we're kind of at a decision point. If we were just like over here, I cannot just say like, okay, we topped the 233, we're done. Like if I'm at this candle right here in price, because the 4 may still be in play. Correct, Kyle. Exactly. And then remember too, they're like, we're just estimating this 20 to 30%. So this area is where it should technically end. Doesn't mean that like it taps this and then it reverses immediately. It could end at the 3. It could end a little bit higher. It could end in here. This is why I really love the 233, because it's like it's a low hanging fruit ish, depending on what type of entry you take, that you know most of the time you'll get hit because it's close enough. You only need a small move. I don't need to catch all of this and get in at the low right here. We don't need to. Even ICT says you don't need to be right here. You can just wait. Which is why I love propulsion blocks. Propulsion block in here, if I was still using this leg as the manipulation, just to be clear for everyone, because I didn't know yet that we were going to chop around. This is your propulsion block, because you tap back into it right here. We validate it by closing above it. We come back to it, holding. So this is where I trade personally. In this case, I'd be just chopped around. My stop usually below the propulsion block, so I would still be in play, but I'd be just holding on price for 15 hours. No way. No way. I don't trade gold either. I despise gold. I touch gold and it does the opposite. So if you want reverse signals, I'm kidding. Don't. So again, this goes very important. And then as Adam mentioned, this is the fractal side of the curve idea that we kind of talked about. So if we are on a, let's see on the 5 minute what it looks like. It's just chomps, 1 minute. You can do the same exact thing on the 1 minute. Is there a high resistance in here that we rated? Not really. We can count this. It just looks a little bit iffy. We didn't really have much trouble going through it. We didn't build liquidity. Is there one to the left? Let me delete this. I'm just gonna mark it like this so that we know-ish where the range that we're in. Let's do something like that. Here we go. High resistance. We failed to rate that. So this is what I'm looking for. We go back. We rated it with this. The leg is going to be from the swing high to the swing low that breaks that leg. Right? Do we close below the 50%, the 75%? It's roughly around here. Not really. We just chop around. So I'm not as comfortable. Fair value gap or rate on liquidity. Fair value gap right here. So I'm going to use the right side of the curve. I'm going to make that decision once I'm around here or around here. Because we're just chopping. Where's the 233? Right there. So this is kind of like where I'm looking at. What happens when we tag it? We start chopping. I'm happy. That's fine. I just need a move that gets me up to there. So this is fully fractal. I hope this kind of helped. This was only one symbol, so maybe we can look at a few more. I don't know if you guys are more interested in looking where gold goes, but I know someone asked for NQ, someone asked for BTC. Any questions? Do I move to a new ticker? NQ. Beautiful MSM, I know. It's gorgeous. This close is very important. All right, let's do, I said BTC to someone, so let's do BTC. Then we'll do NQ. Oh, the age-old question, Coinbase. I'm feeling Coinbase today. 50-minute. High, low. Let's start from the high. High resistance, check. Is there a prior high resistance? We're kind of at all-time high, so I would have to scroll back for months. So I'm just gonna save you guys that pain. But even if there's a liquidity in here, it's still the same swing. So just cut me some slack for this one. So this is what we're looking at. Right? We reached that one. So if this is to fail after we reach that one, remember 20 to 30%, 20 to 30%, this is where it's gonna fail-ish. Is the other thing that it talks about in the, I think it's in here, OTE. This is what's important. If it does fail, I'm just giving away too much sauce today. That's crazy. If it is to fail, a market maker model fails at OTE of the dealing range. Because we're either trading inside of a market maker model or we're in a graded swing. That's the A or B scenario. OTE is around 60%. If this is 30 and this is 30, this is around OTE. For the non-believers, OTE. I. This is our implied dealing range. CDOT, 70.5, 62%. This is where we look at. This is why I like propulsion blocks, because I'd be more into this area. That said, I don't trade Bitcoin anymore. On the upside, which actually is gonna show a really good point as well. Where is the high resistance? There's one over here. And how did I do that? Here you go. Is there a high resistance all the way back here? Very tiny, but yes. That's your high resistance. Not really much else. So this is what we're going to look at. Swing highs all the way up here. Now, does this make sense based on the range that we have? If we go back to the little press that I made. If this is our anticipated dealing range on average, the market maker buy model, aka the 233 or the 4, should be around here. Does it make sense that the 233 is all the way up there? If this is our market maker buy model idea? Not really. It's very far away. So we can kind of dial in a little bit more, go on a lower time frame, and see what this looks like on a lower time frame. Yeah, Dell, you're right. My bags are unhappy because I didn't load enough. High resistance. This is not really good, not really strong. So we're going to go back and look around there because now we're on a new time frame. We have to go back ages. Same high resistance, really, is what we rated. There's one here now that we could look at if we, for some reason, tapped into. But the result is going to be the same. Oh, here we go. So now we have either this, swing high, swing low, the raids, or this. Personally, just to stay entirely mechanical, this is what I'm looking at. 2, 3, 3, same exercise. We're just going to extend it. Send it into oblivion, and then the floor. My OCD is going to run me crazy on Bitcoin because the ticks are so small. Okay. So we reached the 2, 3, 3. Whoa. We topped it. It's nice. Now we're trading in here. What does that mean? We've reached the 2, 3, 3. So our initial target is kind of reached. Now we're in that area of being cautious. Because terminus is somewhere in here. Now, it could just skyrocket and go higher. Absolutely, it could. This doesn't mean that like price has to turn around at this point. But again, we don't care about that. We're only looking to capitalize on one move of this market maker model. Sell side of the curve, buy side of the curve. However you get in is up to you. This is where, to me, I would never get into a position up here. Why? Because we've already reached some sort of terminal. I'm longing the premium, longing the high. What am I doing? Right? People that are familiar with a 2 and 2.5 retracement, they're just edging this target, coming back, going back up. Fractal model right here. Not fractal model from Sniper, although likely something in here could be there. In here, high resistance, do we rate it? We do. So staying on the same time frame, we'll be looking at this. Because we rate this high resistance. Just want to mark it out for you guys. We rate it right there. The swing is this. 2, 3, 3. I'm just going to use this line because I'm lazy. See how we're just chomping around there now? So this is the fractal. Why fractals are so strong. This is literally it. My beloved propulsion entry. Validate this order block. Right there. 50% of the median threshold is respected. This, therefore, is a propulsion block. We validate it here. This candle comes back, taps into the propulsion block. Propulsion. Amazing. That's why I love propulsion blocks. Right or right out. That's it. What do we after? Fair value gap, liquidity void. Fair value gap is here. Breaker. Tap it right there. Choose your weapon. 2, 3, 3. Done. I don't need to hold this all the way up to 4 or 4 of the previous one for that matter. Because I only care about this. These projections are not something that I studied because I wanted to call the high and the low of every move. It just helps me get a piece of price action. And that's it. All right, likely just going to look at NQ and then call it here. If you guys still have questions, just throw them my way. Happy to answer them. But we're just going to move to NQ quickly. We've been going for an hour now, so I'm just going to keep this.
You got a question in the chat too.
Oh, yeah.
By Breezy Sway.
Do you have a propulsion block indicator? Not out there. Short answer. Maybe in the future. Sure. But if it's hard to see for you, ask me some questions. Why is it hard? Like maybe you can talk a little bit more about that. As I said, it's my favorite PD array. It's probably the one that I've looked at the most in my life before we look at NQ. What exactly do you look for? Let me go back to, where were we at? Bitcoin. Coinbase. 1 minute. Where are we on the 1 minute? On the 5 minute? 5 minute. Here we go. So, there you go. T-Trades did it. I can't speak now. The man did it. So definitely watch that. But if you want to still listen to my coder ass talk about price action, then I can. Just let me know. He probably explains it very well. So just let me know. I can still talk about it. If you guys want to see it, just drop me a 1. Otherwise, I'll just move to NQ if you don't care about propulsion blocks. Okay, sure. All right. Propulsion block, easy addition is a down close in the bullish scenario is a down close candle or a series of down close candles that tap into an established order block. What does it mean by established? Down close candle that takes liquidity, categorizes an order block. We need to close through the body. For me personally, to validate it, we close through right here. So this makes this an order block. Now, any down close candles that tap back into this can be a propulsion block. Before we get there, when is this order block invalidated? Personally, when the mean threshold, aka the midpoint of this candle, is traded through. Some people draw the midpoint of the whole candle. Some people draw the body only. Some people do from the open, in this case, to the low. In this case, it respects all three. You find out through the reps and going through the charts which one makes most sense to you. I personally tend to use a combination and kind of grade them. Like this to me, just using the body, if it respects the 50% of the body, is very strong. If I have to kind of like fit it to see how far it respects it, I'm not like super confident. So personally, I just use the body. Body tells the story, I stick with that. Now, propulsion block. Changes to the delivery. We validate this order block. These down close candles are trading back into this. The moment that this series of candles is closed above, to me, it validates the propulsion. How do I know that it's going to have to close above all three? In this case, I'm just being a little bit of a hindsight Henry, so I'm going to rephrase that a little bit. The moment that we close back above the first one, I can already technically say that this is a propulsion block based on how I personally see it. If I see let me just change this to propulsion. If I see a series, I'm just conscious of the fact that I would be stronger if I closed above all of them. But sometimes when I'm a little bit itchy, sometimes I rush it. Sometimes I'm just very confident. I may just enter back when we retest this propulsion block on this candle. And it's the same kind of logic that you can apply to order blocks. Like some people just say that the order block is all of this, but I don't have time for that. I can't just wait for price to close over here and then find a propulsion block, because based on my back testing, a lot of the times it just never comes back. So the first close that I have above, I start categorizing this as the order block. And then I look for down close candles that tap into that. If those get respected, I'm happy. If we were to close above this one, let's say on a different candle, let's say here, then I'll be counting as this as the order block. That's just purely my own interpretation. And it's not taught anywhere, I believe. I don't claim I invented it. It's just a way that I made it mechanical for myself to respect my own rules. Pretty much how I see it. Remember that out of propulsion blocks, the most important part of it is the wick. Like the wicks of propulsion blocks are the most sensitive part of the propulsion block. Like sometimes you don't even want to see go back to the body. Like you just want to touch the wick and send it. The moment that you start kind of like trading around it, I don't feel good about it. So to me, the propulsion block is kind of like the key PD array. So I usually put my stop below the propulsion block low. Of course, here got rated, so I would have to kind of like comply with this low. But otherwise, I don't really care about anything else. This is the only signature I'm looking for. And given on, last thing I'm going to say about the propulsion block. Given this, the propulsion block is between the fair value gap and the bullish order block for me. I want that propulsion block to not be here. Like I cannot have a propulsion block that is almost at the terminus. Like it should be in this 20 to 30%. If it's all the way up here, it's not really a propulsion because we're already in other side of the PDRA matrix territory, or maybe we're inside of this higher part. I don't care about that. That's more like stage 2. We're up here. breaker territory for valley gap territory or fractal territory of a new model. Propulsion block there allowed because it's a fractal market maker model, right? So that kind of hope helps with propulsion blocks. At least that's how I see them personally. I don't know, in this case, this would be a propulsion block to me before price does all this nasty stuff. Of course, a bearish one. Because we validate this, not BB, before people think this is a breaker and they out me on social media. This, order block, bearish order block, tagged, validated. This candle trades back into it. We confirm it, aka we close below it on this candle. This to me is a fair trade if I were to frame this. My stop goes above the high of the propulsion block, which would be here. Here I'll be just mad because this happens. It happens. You win some, you lose some. But this is how I would see it. You can see how like the 50% of this body definitely gets traded through. So I don't really like these anyways. Like when I start seeing this stuff, I'm less happy. And if you force it, even you still get invalidated. So in this case, would just be an invalidation for me personally for how I trade, at least. All right, let's look in Q and wrap it up. We had CPI today, so price probably makes no fucking sense. Correct. All right, 50-minute chart. Let's look at this low. No financial advice on whatever I say right now because I know you guys are just going to be trading this. This is the low. High resistance on this side is here. We rated it here. So this is the swing eye that I'll be drawing it from. Like that. Did we close back below 75% of it? Here we most certainly did. See? So I'm looking for measuring the right side of the curve, not the left side. We're chopping around. We went all the way back below 75%. So it's right side of the curve time. Swing low rated or for valley gap. No for valley gaps. No swings. Up until here. T trades. What are you doing here? Are you already in Italy next to me and I just don't know? The man just said you and left. Fair. All right, anyways, back to it. Here's the rate. So I take the area between the low and the high that has the first accumulation. Does that make sense? Okay, one yes is enough for me right now. So now I'm looking at what? This, 233, big old wick, 4 reached. So that's it. Propulsion blocks in this area. This order block certainly did not hold. We traded below here. So this is the order block I'm looking at because it rated liquidity. Definitely did not get respected. This, tough to say it's an order block. If we're looking at bodies tell the story, you would look at that as order flow. This down close candle taps into that. We validate it. We tap it back. Here's your propulsion. Bye-bye. 50% of the wick, most sensitive part, propulsion. This is very choppy. Like, it's not clear at all. Very difficult. I did not trade, book the stream on purpose. Like, this London session, what is this London session? What is it? Doesn't make sense. It's a barcode. But if we were to just look at price, this would be the propulsion block because it taps into this, which is the lowest body down close candle, even though it doesn't take liquidity. So it taps into it, validates, comes back, stop below this, ignition. That's it. Maybe we can look at, I don't know, yesterday. But we're kind of going long. So unless you guys have any specific questions, I think I'm just going to wrap it up here.